In chapter 4, we're going to be looking at the general journal and the general ledger. Okay, so up to this point, we've analyzed transactions using the fundamental accounting equation. We've then used our T accounts, right? And then we started to prepare trial balances. In chapter 4, we're going to start recording these transactions into a journal, all right? And these transactions, once we record them into a journal, they're going to be known as journal entries, okay? So in section 1, we're going to look at the general journal and we're going to record transactions in the journal, and we'll also be preparing compound journal entries. All right? So let's move on to the next slide. Okay, so this is the accounting cycle. Okay, so we have a cycle, all right, and these are the steps in the accounting cycle. And the accounting cycle is just a series of steps performed during each accounting period to classify, record, summarize data for business purposes and to produce the financial statements needed for those external users. Okay, so we've already done step 1, which is analyze and classify transactions. So now we're moving over to step 2, and that's going to be journalizing the transactions. And we'll eventually go through all of these steps. So there's a total of 9 steps that we will look at during this semester of accounting, okay? So we record journal entries inside of a journal, all right? And our first objective is to learn how to record these financial transactions into the journal, all right? The journal is going to be known as our original entry, and it's like a diary. So, in school you keep a diary, right, or a journal, and these are the activities that you're going to do throughout the day or throughout the semester, right? So businesses also have a journal that is like their diary, and a business or accounting journal does the same thing as a diary. All right, so the journal keeps record of the financial events or transactions in order that they occur, that they are going to, in the order they occur. Okay, so we call this the chronological order. So everything's going to be set up in the date, as of the date, in chronological order. All right, so basically, journalizing means that we are going to record transactions in the journal. That's all journalizing is recording transactions in a journal. Okay, and you want to remember that term. All right, and business events or transactions that have been recorded in the journal are going to be known as our journal entry. All right, so journalizing is just recording in the journal, and then the actual record that we record, or the transaction or business event, is going to be known as the journal entry. All right. So next, let's move on to the basically what is a journal look like. So this is a general journal, okay? And what we want to do is we want to take note of the journal is going to have a date, a description. The post reference just relates it back to where it's coming from. Then we have a debit column and we have a credit column. And we're also going to have page numbers in our journals, all right? So if we take a look at this journal entry, this is an example, okay? It's Carolyn Wells, and she's an owner, and she invests 100,000 cash into her business on November 6th. Okay, so we're going to look at each part of the journal entry and how we will record this entry if she were to invest 100,000 into her business. Okay, so first we want to take note of the date. So we want to record that it's November 6th. Okay, and then we want to record cash. All right, we're going to be increasing the cash in the business. So that's going to be our debit amount. And the description is going to be the actual account that we're going to be debiting, which is our cash. And we'll come over and we'll record 100,000 here in the debit column. Okay, then we'll go over and we're going to be looking at Carolyn Wells Capital, so her interest within the company. All right, so what we do is we record a credit to capital for 100,000. Okay, and so That's going to be the normal balances of the two. Our cash is increasing as well as our capital. All right, so we're going to be recording both of these entries in their normal balance to increase them. And you want to remember that a normal balance is just the side of the account where it is increased. Okay, so let's move to the next slide. All right, and then there's also going to be, once you post the transaction, you could also insert a memo. All right, and it says enter a complete but concise description of the transaction. Whenever possible, the journal should refer to the source of the information. Okay, so memo 1 is basically where we can find the source of this information. So most times there's going to be some type of memo or some type of source document that we can refer back. And we definitely need that type of information for all of our audits. Okay. And it just keeps an audit trail going so that we have something to reference back to. All right. And even if there were errors, we could locate an error if we had some type of source document. And source documents also are going to be preventing fraud. All right. So this is source document, some type of audit trail is always going to be important. All right, so recording a business transaction. So we've looked at the journal, the general journal, right? So we already know how to analyze the financial events, all right? And that's going to be identifying the accounts that are going to be affected. So in the previous journal, we read the journal and the transaction, and it said that the owner, Carolyn, invested 100,000 cash. So cash is an account. All right, and anytime an owner is investing, we're going to be putting that under our equity into the capital account. Okay, so that's how we're going to identify the accounts. Then we're going to classify the accounts that are affected, and that's when we start to put the journal entries in. Okay, and we determine the amount of the increase or decrease for each account. All right. And then once we do that, we want to make sure that we apply these rules of debits and credits. So which account is debited and for what amount, and which account is credited and for what amount. All right. So in our previous journal entry, we decided that cash was going to be debited and that our capital would be credited. Okay. And then we could go and make a T account for the form, and we can go then and finally record the complete entry into the general journal. All right, so that's going to be our process, analyzing and figuring out which accounts are going to be affected. Is it an increase or a decrease? We got to make sure we apply the debit and credit rule. So if for every debit there needs to be a credit. Then we need to make our entry into our T account and finally record it in our general journal. Okay, so that's going to be the process of us recording our business transactions. And we'll go through all of that today as well in some examples. We're going to more so focus on using the general journal. Okay. You should be pretty clear on T accounts. So we're not going to too much go back into T accounts, but you should be pretty much clear on how T account works. All right. So section 2 talks about the general ledger. And in section 2, we'll post journal entries to the general ledger accounts, and we'll correct errors made in the general ledger. All right, so ledgers contain a separate form for each account. So each account is going to have a ledger. Our cash account, our accounts receivable, our accounts payable, each account is going to have their own ledger. All right. And for simplicity, a ledger is basically a T account. However, ledgers have balances, okay, that are run on from each entry or transaction that's posted to the ledger. All right. So the third step of the accounting cycle is posting to the ledger. The process of transferring data from the journal to the ledger is what's going to be known as posting. Okay. So once we get it in our journal, we record it in our journal, then we need to post it to our ledger. Okay. So what is posting? Posting is the process of transferring data from the journal to the ledger. Okay, so once we record it in our journal, it's going to be posted right over to our ledger as soon as we press post. Okay, so we'll be recording ours with pencil and paper, obviously, and we'll be posting it from our journal to our ledger. All right, so this is a ledger, and a ledger is going to have an account. You're going to have an account name, an account number. Okay, so we have our account name here, and we'll have our account number, and then there will be a date, a description, and then a post reference. So post reference is telling me that this entry is coming from Journal 1. Okay, the previous journal we looked at. We used Journal 1 to record that entry. And this is all just keeping an audit trail, okay? Next, we record our debit. We debited cash, so we'll record a debit. There's also a column here for credit, and then we have our debit balance, okay, our debit and credit balance. And this is what I was talking about earlier. You can kind of think of a ledger as a T account, but a T account is not giving a balance, okay? So in our ledgers, a balance is going to be pulled over from the debit and credit columns. All right, but our balance most times is going to end up in our normal balance section of that particular account. All right, so cash normal balance is going to be a debit. And so you see here that we do have a balance in the debit. All right, most times those balances are going to fall inside of the normal balance. All right, and in previous chapter 2, we talked about normal balance. You do need to know your normal balances throughout the whole semester. And I recommend you learn the normal balance. Okay, once you know the normal balance, then you can pretty much do accounting. Okay, because if it's not the normal balance, which increases an account, then the opposite is going to decrease the account. So more so focus on normal balances. So for instance, cash normal balance is a debit, and it's going to increase with a debit, okay? So if we wanted to decrease this account, we would need to record a credit. All right, and once you know the increase side, the decrease side is going to come normally to you. All right, so that's my recommendation as far as understanding where these accounts will increase and where they will decrease. So when we're posting, there's going to be a five steps for posting. All right, on the ledger form, you're going to enter the date of the transaction. All right, and you want to enter the description of the entry if necessary. Usually routine entries do not require descriptions. On the ledger form, you want to enter the journal page. Okay, we went over the post reference account, the post reference column, and that's just the journal page. And then you want to enter the debit amount in the debit column or the credit amount in the credit column. And then from there, you want to compute the balance and enter it in the debit or column balance, whichever it's supposed to go to, whichever is its normal balance, okay? And then finally, you want to enter the ledger account number in the post reference column. All right. So those are just going to be the 5 steps we're going to follow when we're preparing these ledgers. All right, and you will have some ledgers inside of Connect, inside of your homework, where you will need to prepare the ledgers. And ledgers are basically coming off of your general journal. All right, you're just pulling it straight from your general journal over onto your ledger and posting it to your ledger. So for instance, I'll go back to that slide with the general journal here. So if I were going to pull this information over to my ledger, I know I'd be going to my cash account. Okay, that would be the ledger I would open up. And then I'm going to be in Journal 1 for my post reference. Then I'm going to record a $100,000 debit into the debit column of the ledger. And then finally, I would pull that balance over into the debit column of that ledger as well. All right, and you can see that same exact process here on this ledger. So we have our cash account. We brought over our Journal 1. We have our date. We have our 100,000 in the debit column, just like the journal said it was a debit. And then we're just pulling it over to a debit. Okay, so pretty straightforward. All right, so general ledger accounts. In the general ledger account, the balance account appears first and are followed by the income statement accounts. Okay, in the order. So the order is assets, liabilities, owner's equity, revenue, and expenses. Okay, so you have your general ledger accounts, and they're all going to start in this particular order. So we'd have all of our assets first. Okay, and our assets would be our cash, our accounts receivable, our supplies, any prepaid, okay, any equipment. Then we'd have our liabilities, which would be any accounts payable, any notes payable. And then finally, we'd have our owner's equity, okay, which is our capital or our drawings as well. And then we'd have our revenues, okay, for any supplies, expense, insurance. No, our revenues, excuse me, are going to be the income that we bring in. So our any service revenue up to this point. We're just using service revenue or fees income. All right, and then next our expense accounts would come next in our ledger. All right, and those would be our supplies expense, our telephone expense, our rent expense, any of those expense, those ledgers would be listed next. All right, so this order of accounts speeds the preparation of the trial balance and the financial statement. So when you keep them in order, you can move right over to your trial balances and your financial statements when things are put in a certain order. All right, so it's just for simplicity as you move through the process, the accounting process. All right, so journals and ledger errors. Sometimes errors can be made when recording transactions in the journal. The method used to correct the errors depends on whether or not the journal entry has been posted to the ledger. All right, if an accountant wants to correct an error, the correction method will depend on whether or not the journal entry has been posted, okay? So you want to know that errors depend on whether or not it has been posted or not. Okay, so if it hasn't been posted, we can just correct it in the journal. Okay, if it has been posted, then we're going to have to do some reversing of journal entries. Okay, so now what I'm going to do is I'm going to take you over to Connect, and we're going to over to my Excel sheet. So I do want to focus a lot on using Excel, okay, because like I said in previous chapters, it's important as you move through all of your accounting courses that you have an idea of how to use Excel, okay? So we're going to go over some of these practice problems. Let me get it opened up for you. Okay, so I'll post this inside of Canvas as well. So you should be able to go and open this up and follow along with me. Okay, if you go to your modules in Canvas and look in chapter 4 modules. Okay, so what we're going to do here is we're going to be just recording some journal entries into the journal. Okay. So we've pretty much looked at recording these entries into a T account and analyzing them. Now we're going to move them over to our journal. Okay, so we want to first understand the date. Okay, so these transactions, first off, are going to be for Mason Consulting Services. All right, and we want to record a journal entry for each transaction. Okay, so what I'm going to do first is I'm going to give it a page number. All right, and I'm going to say this is page number 1. Then I'm going to start with my date. All right, so we know this is going to be September. So I'll just put in September. Okay, and then we're going to say this is September 1st, just like it says in the transaction. So we'll record September 1st. All right. And then it says Jack Mason invested $57,000 in cash to start a firm. Okay, so basically the same transaction that we had in our slides. The owner is investing money into the company. All right, so we need to identify which accounts. All right, so we know we're going to use our cash account because it is cash. So now the company has more cash. But Mason also has a vested interest in this company. So we're going to be using a capital account as well. All right, and the amounts is going to be 57,000. All right, so we're going to start off first. Our debit is always going to be recorded first. Okay, so we're going to record cash of 57,000. Okay, and then when we're recording in our journal, I don't know if you noticed, but there was an indentation, so we need to indent. Okay, and then we're going to record Jack Mason Capital. Okay, and that's just our capital account. That's how we're going to name it. Okay, and then we'll record that as a credit of 57,000. Okay, and so you want to remember where your normal balances are. Okay, so cash or assets increase with the debit, and then our capital or equity increase with the credit. Okay, and both accounts are increasing. Okay, so that was the first. We got that one done. Okay, so next we purchased some office equipment. Okay, so we have some equipment on credit. Okay, so on credit means we didn't pay cash, right? So we need to create a liability. And our liability is going to be our accounts payable, correct? So we're going to have equipment and we're going to have accounts payable, and our amount is 6,200. Okay, and we're going to do this on credit, so our accounts payable. Okay, so first we're going to increase our equipment. Equipment is an asset, and we increase assets with a debit. All right, so we're going to say equipment. All right, and we're going to go increase it with the debit of 6,200. Okay, and if you just remember for every debit I need a credit, you automatically know I'm going to credit my accounts payable for the 6,200. Okay, so next we have, I'll go ahead and check this one out. That one's good. Okay, so next we purchased an automobile that will be used to visit clients. Okay, so we're going to have a company car, right? And a car is going to be an asset. Okay, and we're going to just name this an automobile. Okay, an automobile is going to be an asset. So that means we need to debit it. Our assets increase with the debit, and that's going to be in the amount of 14,200. Okay, and if we issued a check for full payment, a check is the same as cash. You can take it to the bank right away and receive cash. Okay, so we're going to say that we paid cash. Okay, so don't let that trick you. We paid cash. Okay, so we'll go over and we'll record the cash of 4,200. And cash is an asset, right? Cash is going down if we purchase something, right? So we're going to go ahead and credit our cash. And we decrease our assets with the credit. Then we want to also make sure we are recording these dates as we go. So this is the 16th. Okay, so now let me go ahead and color this one in. We've completed that transaction. Okay, so then next we have the 20th, September 20th. We purchased supplies for $490 and paid immediately with the check. Okay, with check 1002. Immediately paid with a check. Check is cash. Okay, so we're going to go ahead and we're going to record our supplies. And supplies is an asset. We're going to increase it with the credit, with the debit, right? But cash is also an asset, right? But we need to decrease our cash because we used some of it. So we're going to decrease it with the credit. Okay. Got that transaction done on September 20th. So next we're going to go and we're going to look. It says we returned damaged supplies on September 23rd for a cash refund of $155. Okay. So on the 23rd, some of our supplies we received were damaged, right? And we got cash back. So we're going to just go and debit our cash. Our cash is increasing by $155. Okay, and then we're going to go to our supplies. We sent the supplies back, or most times they'll just let you keep the supplies, but we sent the supplies back. So we need to decrease our supplies by $155 as well. Okay, so hopefully you're following me. If you aren't, then I suggest you bring the video back a little, slow it down so that you can understand and grasp the concepts. Okay, we will be preparing journal entries in some of our exams, so you do need to understand how to prepare these journal entries. Okay, so now we're going to go over to September 30th. And it says we issued a check for $3,900 to Den Incorporated as payment on account for invoice 9823. So 9823, that was going to be on the September 4th when we purchased that equipment. Okay, so we're going to pay some of it. We're not paying all of it, but we are paying some of it. Okay, and if we issue a check, that's going to be cash. All right, but our accounts payable is now going down. Okay, so you see we put that amount in accounts payable here. Now it's going down. In order to decrease it, we need to debit it. Okay, so we'll debit our accounts payable for $3,900. Okay, and then we'll credit our cash because we use cash. Check is the same as cash for $3,900. Okay, so that journal entry is complete. Now we're going to go to the next one. Same date, September 30th. And we'll give it a date as well, September 30th. All right, and it says we withdrew $2,700 in cash for personal expenses. So anytime the owner, which is Zach Mason, withdraws money for personal expenses, we do want to keep personal and business separate. So we have to create a drawing account. Okay, so in this account, we'll call it Zach's drawing. We'll say Zach Mason, comma, drawing. Okay, so this is a drawing account. Anytime an owner takes money away from the business for personal expenses, we're going to be recording it in this drawing account. Okay, and they withdrew $2,700. Okay, and a drawing account is part of equity. Okay, and it decreases equity, so that's why we're going to record a debit to that account. Okay, and then we're going to credit our cash. Okay, and our cash is going down because we gave them cash. He took out cash from the business, basically. So next we have on the 30th again, issued check 1004 for $1,550 to pay October's rent. Okay, so we're paying for a rent. So this is going to be an expense, and we're going to call this rent expense. Okay, and rent expense, any expenses are increased with the debit. Okay, so we're going to record a $1,550 of rent expense, and then we need to credit our cash because we use cash. All right, if it doesn't say cash, or if it says check, or if it just says we paid, but it doesn't tell you what we paid with, most times it was cash. Okay, in this example, we issued a check. Like I said earlier, check is same as cash. Okay, so we'll record $1,550 to decrease our cash with the credit. So the next one, we perform services on the 30th. Okay, so now we're bringing in some income. We perform services. All right, so now we have some revenue, and revenue is located under our equity umbrella. All right, so we're going to record our cash that we received. It says we received cash, but we're also going to record the revenue on the other side of our assets plus assets equals liabilities plus equity. Okay, so we'll just call this service revenue. It could be called service revenue, fees, income. Since they said service, we're going to call it service revenue. If it was fees, income, then they'd say we received fees or a client paid fees of so and so, okay? So we'll record the 2,600 as cash. Sorry, this one's going to be cash. Our cash is increasing. And then we're going to record our service revenue with a credit, okay? Revenue is under our equity umbrella and it increases our equity, so we need to record a credit for our service revenue. Okay, and I'll just clear those out. Next, we paid $420 for a monthly telephone bill. Okay, so this is an expense, correct? So just like in our home, we have a telephone bill. It's an expense to us that we need to pay. It's a liability. All right, so we'll just call this one telephone expense. Okay, and we'll record a debit for our telephone expense of $420. Okay, and then we paid it with check, which is the same as cash. So we'll record that into our cash and we'll credit it because our cash is decreasing and our cash decreases with the credit. All assets decrease with the credit. Okay, so we've recorded all of our entries. Okay, and this is for the month of September at September 30th. Okay. And most times these entries are going to be recorded in chronological order and most times when they're actually happening. Okay. So if you got a little lost, do go back and go through it again. You'll find in the slide there's going to be more transactions for you to complete. All right, and I'm going to just leave those open. They're definitely the same as the transactions I just went through, so it's going to give you some practice. All right, so definitely go through these other 3 slides, and you can just click on them in Excel by clicking the bottom tab of each of the slides, and you'll be able to get through. Okay, so that's the first part of recording general journals. Okay. Co-recording your transactions into your general journal. All right, next we're going to be looking at moving those over to a ledger and then finally moving them over to a trial balance and preparing our financial statements. Okay. Okay, so now we have our ledger accounts. Okay, so there'll be a tab as well for your ledger accounts inside of your Excel file that will be posted in your modules of Chapter 4. And in this general, just gives you an idea of the general ledger. We have our account name, our account number. We have our date, our post reference, our debit, our credit, and our debit balance. Okay. I have chosen not to include the description into my general ledgers. Okay, just most times companies are going to be working with software, so most likely the description is not going to be necessary. It just kind of pulls over on its own. Okay, so what we're going to do here, though, is we're going to create account names. Okay, so we know we need a cash account. Okay, and then we'll go back over to our slides. We're going to need equipment, automobile, supplies. Okay, so cash, automobile, Okay, and then next, let me make this a little clearer so you can actually see it. Okay, our automobile. Then we have our supplies. And I'm just going over to my journal and I'm recording the accounts that I use. So we have supplies. Okay, and then we have equipment. Okay, and then I'm going to go back over again. We have a cash account. We're going to need an accounts payable. We're going to need a drawing account, a capital account. Okay, so we'll go over here and we'll create our accounts payable ledger. And then we'll create our Zach Mason Capital. Okay. And then we'll go and we'll do our drawings next. Okay, so everything's in order. So we have Zach Mason drawing. Okay, open this up a little so you can see what the account actually has in it. Okay, so okay, that's good. Okay, so we did our drawing. Now we did our capital and our drawing. Then we had some expenses, so we'll go back over to our journal. All right, we have a rent expense and a telephone expense, and we have service revenue. Okay, so we're going to record our service revenue next. Because like we said in our slides, we want to prepare our ledgers for simplicity purposes. We want to order them assets, liabilities, equities, revenue, and expenses. Okay. So service revenue is our next account. And then we have our supplies expense. I believe was it supplies expense? Let me double check. Sorry, it was rent expense. But supplies expense is definitely one you would see in your ledger, okay? Just in this problem, we didn't have any. We just had a rent expense. Okay, and then next we're going to record our telephone expense. Okay. We're going to create this ledger for our telephone expense. All right. So we have all of our accounts, and usually there'd be an account number, but in this problem, it didn't give us any. If it does reference an account number, you definitely want to be putting those account numbers with the different accounts that they are in line with, okay? So in our cash, we go back to our journal and we'll start at the top. Okay, so we have cash. We debited our cash for $5,700 on September 1st. Okay, so let's go back over to our ledger, and this is going to be for September 1st. And this is going to be in journal number 1. We debited for $5,700. Okay, And then we recorded the other side of the journal entry in our capital account on September 1st, right? And that was going to be for the amount, it was going to be in journal 1, right? And that was going to be a credit of 5,700. Okay, so you want to remember your debit and credit rules. For every debit, there must be a credit. Okay, so we're going to credit it for 5,700. Okay, and normally our balances are going to run on. So what I want to do here is I want you to go over to these balances here, and we're going to create run-on balances. Okay, so this is going to equal this minus the credit column. Okay, and most times the balance should definitely be here in your credit column. Okay, in your debit column for that asset. Over in your capitals, most times it's going to be, the normal balance is going to be here. So we're going to say the credit column equals the credit column minus the debit column in capital. And we'll just pull it down. Okay, so every time I record an entry, it should pull it over. Alrighty, so next we're going to go to the next journal entry, and it's equipment and accounts payable. Okay, so we're looking at our equipment account, and we'll go and find our equipment ledger right here, and it was the date on that one is September 4th. Okay, so first we want to go and we want to record September 4th. Okay, and it was in journal 1. Okay, and that's going to be a debit of the 6,200. Okay, and in this account we want the same formula, equals our debits minus our credits. Okay, and we're going to just go here till we get the cross like this and pull it on down. So that formula is recording in all of those columns. Okay, and then we purchased this one on account, right? So that was our accounts payable. So we want to go up to our accounts payable, and that's September 4th. We purchased this equipment, and we can go back to journal 1 for any reference or any audit trail. Then we're going to record a credit of the 6,200, just like in our journal entry. All right, and we're going to create the formula equals 6,200 minus our debit column. So our credit column minus our debit column. Then we just want to pull that formula down. Okay. So we go to our next journal entry. Okay, and our next journal entry says automobile. We purchased that automobile for 14,200 and we used cash. Okay, so we're going to be going to our cash account, and it's going to go down. Let's get that date. That was the 16th. So we're going to go to our cash account. We're going to record September 16th. Okay, and that was in journal 1. All right, and our cash was going down, right? So we need to record 14,200 in the credit column. Okay. Alrighty, so I'm gonna correct these formulas a little bit. Okay. Because I need this to create a run-on total, right? So we're gonna do this together. So this column underneath the debit is gonna equal this amount, right? the previous debit amount minus the credit amount plus the debit amount. Okay, and that's going to give us our total. And now if we just go ahead and pull it down, everything should flow. Okay, so we have our run on balance. If I were to record 6,200 here, it would continue to run on the balance. Okay, so that's what we're looking for. All right, so I'll go ahead and delete that. And so let me go back to the journal entry. We had our automobile and our cash. Okay, so now we're going to our automobile and we're going to record that amount in our automobile ledger. So this is for September 16th, just like the journal says. And it's from Journal 1. Okay. And we're going to be debiting. We increased this asset by 14,200. Okay. And so when you first begin, you're going to just have to say that this equals debits minus credits. Okay, and then for the next column, we're going to say equals our previous debit balance plus our debit column minus our credit column. Okay, and that'll just bring on our run-in total. And you just want to pull it down. Okay, so every time we record an entry here, it'll make note. It'll bring the total through. Okay, so as you more practice, you'll get it. Okay, so now we're going to do supplies. Supplies is on the September 20th. We're going to record an increase in supplies and a decrease in our cash. Okay, so we're going to go over to our ledger and we're going to post for September 20th. Journal number 1. Okay, and the amount is decreasing. Got to go back there, kind of slipped my mind. Our supplies were $490. Okay, so we decreased our cash by $490. Okay, and then we go over to our supplies. We increased our supplies by $490. So this is September 20th. Record the date. Then we record the journal. And we're going to have a debit of $490, just like the journal said. Okay, then we're going to go create our formula. So equals our debits minus our credits for the very first entry. If there were a balance here from previous months, then we would set up the formula like I'm going to do now. So equals our previous amount minus, let's do our debit column, plus our debit minus our credit. Okay, and that's going to just be a run-on formula that we're going to use in this debit column because assets are debited. Their normal balance is a debit. Alrighty, so we'll move on to the next journal entry. We just finished with September 20th. We're going to go to September 23rd. And we're going to record cash. Okay, we returned some supplies in this transaction. They were damaged. So we're going back to our cash and our supplies. Okay. This was September 23rd. So September 23rd, same journal, journal 1. Okay, and we returned supplies. So we received cash back because we returned those supplies. So our cash is increasing. We're going to record the $155 in the debit column. Then we're going to go over to our supplies. All right, and we returned these supplies on September 23rd. Journal 1. Okay. Okay, and if we return them, we need to decrease our supplies by 155. Okay. So you'll continue on as you go, just like the steps I've went through, okay? And you'll just record each of these transactions into your ledger. All right, so what was our next one? We have accounts payable and cash. Okay, so we paid off some of that equipment. So we're going to go to our accounts payable. In order to decrease our accounts payable, we need to record a credit. Okay, and this is on September 30th, I believe. If you forget the date, go back to your journal entry. Yes, it's September 30th. So September 30th, and it was in journal 1, and we made a payment, so we're going to decrease our accounts payable by $3,900 with the debit. Okay, and so now I want to go over and correct this account. So our second entry is going to say it equals the previous amount minus the debit amount plus the credit amount. Okay, and we're going to just go and pull that down. Alrighty, so we're going to go over to our cash, and at September 30th, journal number 1, we made a payment to our equipment. Okay, and we need to record that. So we're going to decrease our cash with the credit. So we're going to credit our cash by $3,900. Okay, so now our cash balance is $38,565. Okay, and our accounts payable is $2,300. Okay, so we still owe $2,300 on the equipment. All right, let's go to our next entry. Okay, so we're in our drawing account. So Mason took cash out for personal expenses. So we're going to record a decrease in our cash and an increase in our drawing account. This is September 30th again. And we're still on journal 1. Okay, and our cash is decreasing by $2,700. In our drawing account, this is the first drawing, so September 30th, journal 1. We're going to increase our drawing account with the debit. Okay, drawing account decreases our capital. Okay, capital normally increases with a credit. In order to decrease it, we need to debit. Okay, so we're going to be debiting it for the $2,700. All right, and then I'm going to go ahead and get my formula for the first time. So equals debits minus credits. Okay, so our balance in that account right now is $2,700. And I can go ahead and create this next formula. I'm going to say the next debit balance is going to equal my $2,700 plus my debit column minus my credit column. Okay, and then I can go ahead and drag that formula down, and it's going to keep a run-on balance for me. All right, so we'll go to our next journal entry. We had a rent expense. Okay, so let's go and record our rent expense in our ledger. Righty, so we'll find our expenses, and everything's listed in order. So our rent expense is here, and this is going to be September 30th as well. Journal 1. And our rent expenses are expenses increase with a debit. So we're going to debit for $1,550. Okay. And most times you're going to see that rent expense is going to be recorded at the end of the month. If it was done earlier, it would be considered prepaid. Okay, so then we're going to go over to our cash. We paid with a check, which is the same as cash. And we're going to record that transaction, September 30th. Okay, journal 1. Our cash decreased by $1,550. Okay. Then I think I needed to set up our rent expense formula. So equals debit minus credit. Okay, and the next column is going to equal this balance, right, plus my debit minus my credit column. Okay, so that's all set up. Okay, and when I bring these over to the modules, your formulas should pretty much already be set up, but do have an idea for how they are set up. Okay, so our next journal entry that we need to post is going to be our service revenue, so the revenue we earned during the month. So we earned cash and we need to increase our revenue. Okay, so we're going to go over to our cash, and this was for September 30th as well. Let me go ahead and insert. So we're going to need another column. Okay. Just pull this down. This will all be set for you all, so you shouldn't have to worry about this. Okay, so September 30th. Was still journal 1. Okay, let's make that uniform. Journal 1, right? And we received cash of $2,700. We performed services. Okay, so our cash is increasing. Then we need to go and increase our revenue for the month. Okay, because we need to keep account for the income that we are having for the company. So September 30th, and this is going to be referenced back to journal number 1. And then we're going to record a credit because our revenue increases with the credit of the 2,700. All right, and I'm going to go ahead and set up this formula. It's going to be in the credit column. It's going to equal our credits minus our debits. Okay, and then for the next one, I'm going to say equals this top 2,700 balance plus my credit column minus my debit column. Okay, and so my balance will run on for me. And like I said, this will be set up in your Excel already, but you do want to have an idea for how it works, okay? Excel is important for all business majors. Excuse me. All right, so now we have our final journal entry that we need to post, and that was a telephone expense for $420, and we paid that expense using cash. So we'll go over to our telephone expense, and this was September 30th. Okay, and it was in journal 1, and we're going to debit it. All expenses are debit for $490. Okay, and then I'm going to create my balance column, so equals my debits minus my credits. Okay, and then for my next second cell that I want to create a run on, I'm going to say equals the 490 plus my debit column, right, minus my credit column. And then I'm going to go over, right click, and pull it down. Okay, so that should be all set up. So now I need to go and record that last side of that journal entry. I need to go ahead and post it into my cash account, cash ledger. Okay. Okay, and that amount was a credit. And was it 490? Let's double check. 420. Okay. So 420. And I can go back over here and correct that as well to 420. Okay. So this is an idea, gives you an idea of how once we record the entry in the journal entry in our journal, how we go over and we record it and we post it into the ledger. It's recorded in the journal, it's posted in the ledger, okay? So when we record it in the journal, that's known as journalizing. Okay, and then we bring it over to the ledger and we post it, then it's posted. And from the ledger, we can go and create our trial balance. Okay, and we're just taking each of the balances for our trial balance. Okay, and I'll do that part in the second lecture video. Right now, I just wanted you to get an idea for your journal entries and your ledgers, okay? We've basically already went over how to set up a trial balance. So from this, you should be able to follow over to your trial balance, okay? And your balances are basically the last number, whatever the balance is in each of the ledger accounts. They're going to be pulled over to those columns in your trial balance, okay? So that completes this video. Do look for the next video where I pull over these ledger balances over to the trial balance and then finally create financial statements. But with this video, you're definitely ready to get started on your homework. So there we go. You guys got this. Any questions, you can email me and I will get back to you.